Welcome to the series on how to make your business more sellable. On this episode, we are going to be talking about personal expenses being run through the business. I want to let you know that 80 to 90% of the businesses on the market do not sell. That's a national average. I sell about 90% of the business I take to the market. My name is Jim Parker. I've been selling businesses for nearly 25 years now. I typically sell businesses that are in the gross sales range of 1 million to 10 million. So let's talk about those personal expenses. I have seen a lot of businesses over the years. As you can imagine, I talked to a lot of business owners. Over the years, I have seen a lot of different things that business owners have done. And I see a lot of times business owners are running personal expenses through their business. It's more common than not. I'm not here to judge anybody. That is not the purpose of this. This is more to talk to you about trying to put your business in a position where it's going to be more sellable, more appealing to a buyer so that you can maximize your selling price. You can get better terms. And at the end of the day, greatly increase of your chances of actually selling the business. So first I want to say, for every dollar that you're trying to save on taxes, in a situation where you're running personal expenses through the business that way, what are you saving? You're probably saving at the most 35 cents to 37 cents on every dollar. Well, when you go to sell your business, that dollar that you're trying to, that 35 to 37 cents you're trying to save on that dollar, you're losing out on $3, $4, $5 or more for every dollar that you're writing off in a personal expense. So I hope you realize you're trying to save pennies and you might be losing out on dollars. So I want to get more in depth with you today about that. The first thing I want to let you know is that by eliminating the personal expenses that you're running through your business, it's going to make it easier for buyers to understand the financial condition of your business and to see what you're actually making and actually see what the financial health of your business is. The fewer adjustments that we need to make when we're presenting your financials to a buyer, the more trust they're going to have in those financials and the more appealing it is going to be to them, the more faith they're going to have in the financial condition of your business, which is going to result in them more likely to put an offer in on your business, maximize what the price that they're going to put on your business, and you might get more favorable terms as well. On top of that, once a buyer does put an offer in on your business, they will have the opportunity to do their due diligence. And due diligence is basically they're going to have an opportunity to verify the financial information that was presented to them. So, we've presented to them spreadsheets that reflect the profit and loss statements or the tax returns of your business. And during the due diligence process, they're going to be asking for additional financial information that will support that. It could be bank statements, merchant service statements. It could be all kinds of different financial information that they're going to request. And we're going to want to review. It is going to make the due diligence process so much easier for the buyer. And the easier it is for the buyer, the better it is because there's a less chance that they're going to be challenging you on the financial condition of the business, and they may walk away from the contract if they don't feel comfortable, or they may come back and they may want you to lower your price, or they may want you to adjust your terms on the sale of the business. So the due diligence process will become much easier for them the cleaner your books are. You also don't want to be in a situation where potential buyers have something over your head at the end of the day, that they are, in the due diligence process and they're uncovering things that you may not want them to see. And if things went sour post closing, that they do not have something over your head. I've never experienced that situation, but there's always that possibility. I'm not even getting into at this point, things like lenders. Lenders and a lot of the, again, I sell businesses typically that have gross sales between $1 million and $10 million. And a lot of the businesses that I sell, the buyers are going to get an SBA loan, a 7A SBA loan. And if you have a lot of personal expenses running through your business, the lenders may not feel comfortable with it. They may not allow the buyer to lend as much money in the acquisition of your company, again, decreasing the value of your business. So the cleaner the financials are, the better it is for the buyer, the better it is for the lender. And again, at the end of the day, it's better for you. Some of the things we didn't talk about today and that I think you're already aware of is, you are setting yourself up for IRS audits, IRS and tax situations by running personal expenses through the business. And you're also, causing yourself potentially legal issues if something did happen. I mean, one of the big reasons why you incorporate as a business owner is to give yourself protection in case there's something came up. Well, if you're running personal expenses through the business, you might be piercing that corporate shield, and, an opposing attorney might say, well, that corporate shield doesn't really exist because you're running personal expenses through the business. So you're piercing that corporate shield. I'm not giving legal advice in any way, shape, or manner. You should talk to your attorney about that. But that is a genuine situation. Now, there are really good ways that you can legally save on taxes, and other than doing something like running personal expenses through the business. And I advise you, talk to your CPA, and maybe you want to talk to a tax attorney or a wealth manager. There are other options out there where you can save significant amount of money. There's things like cash balance plans. I don't want to get into different scenarios. That's better suited for the professionals that specialize in that type of thing. But, there are avenues where you can save on taxes legally and also put yourself in the position where your business is going to be more appealing to a buyer. You can maximize your sale price. You can get better terms. And at the end of the day, I realize if you're running personal expenses through the business and you stop doing that, you might have to make an adjustment to your salary that you're taking from the business or the distributions you're taking from the business. And that's probably the best way to do it. And to sum everything up and go back to what we were talking about originally, if for every dollar that you are running through your business that is not a legit business expense, you might be saving 37 cents at the most on in taxes. But when you go to sell your business, that same dollar that you are running through your business as personal expenses, you might be setting yourself up where you're losing $3, $4, $5 for every dollar when you go to sell your business. So anyways, my name is Jim Parker. I've been selling businesses for nearly 25 years. I typically sell businesses in the gross sales range of 1 million to 10 million. If you're thinking about selling your business, I'd love to talk to you. You can visit my website at www.jimparkerbusinessbroker.com. I would love to hear from you. Thank you.